What led you into investing? Why space and defense?
Despite the fact that my company was in enterprise software, though, we ended up selling the company for great outcome to a larger firm called Vista. Had a lot of success there. My personal passion was actually always around deep tech and frontier tech, specifically space defense. In 2014, when I was on CNBC for an interview, they were asking me about future plans, and I was already alluding to my next journey would be out of this world potentially, my interest in space.
Core of the business, the brand, what differentiates you?
For differentiating yourself in a very crowded venture landscape is that you can be top of mind for folks. When we started Space.VC, I was pleasantly surprised by someone in my network. A space deal comes across their desk, and we're the first firm that they thought of. That allowed us very quickly to build relationships and build high quality deal sources. And so I think standing for something is really important.
In India, a startup called Pixel. How did the investment come about?
Pixel Space was one of those rare instances where we actually reached out to them. There was a growing consensus if you were able to have hyperspectral sensors, which allows you to see hundreds of bands of visible light. And so I was really intrigued by the commercial potential, became very convinced that the Pixel team had not only the right mindset and the potential, but also the right product roadmap. But Pixel today is a satellite constellation company, and they're also building satellite buses for Indian government customers. We think they can be the most important space company to emerge from India in the next 5 to 10 years.
Today we had Jonathan Lacoste on the board. Jonathan is the founder and general partner at Space.VC, an early stage venture fund specialized on defense, space, and frontier investments. During our conversation, we covered a bunch of topics: his passion for deep tech and frontier tech, what led him to start Space.VC, how does he evaluate founders in space and defense, 3 reasons why founders should pick Space.VC, importance of differentiation in venture capital, the pros and cons of being a solo GP, and much more. Now I bring you Jonathan. All right, Jonathan, so good to have you on the pod.
Thanks so much for having me. Great to see you again.
Likewise. And yeah, as we were just discussing earlier, once again, congrats on closing the fund 2, which is 20 mil. And, a good starting point, Jonathan, could be, especially, for you before this podcast, I was, doing my research, and you have a very unconventional, background, and in such a short period of time as a solo GP, you've made a mark for yourself in a particular industry, which is space and defense and frontier. So to start with, maybe just, talk to us, what led you into investing and why space and defense?
Yeah, absolutely. One of the things I love about venture is that everyone has their own path and journey. If you look in venture today and who's investing in space defense and kind of the broader deep tech category, you have former operators that have started companies or have worked at startups. You have folks that have come from government or military, folks that have maybe worked at one of the larger defense primes or a SpaceX or something like that.
Yeah.
You even have folks that have come from like the journalist path. So in venture, kind of all avenues lead to being a VC. For my journey, I was an entrepreneur. So I've been in and around the venture ecosystem since I was 17 years old. I started an enterprise-backed software company in college, ended up dropping out after we raised a little bit of venture, and spent the next 10 years building and scaling that company. We raised over $70 million. And so to say it bluntly, I have deep empathy for the founder experience, having gone through it myself, having jumped into this ecosystem so young. Was luckily at the time I was building the company in Boston to be mentored by some incredible industry leaders and entrepreneurs. So I was able to kind of learn very quickly from their experience. Despite the fact that my company was in enterprise software, though, we ended up selling the company for a great outcome to a larger firm called Vista. So had a lot of success there, which I was very thankful for. Despite that being in data infrastructure, my personal passion was actually always around deep tech and frontier tech, specifically space defense. I was a student of history. I love to understand geopolitics. I remember once in 2014 when I was on CNBC for an interview about my startup, they were asking me about future plans, and I was already alluding to back then the fact that maybe my next journey would be kind of, out of this world potentially, alluding to my interest in space. And so to make a long story short, as soon as we sold the company, I knew that, I'd been spending time intellectually building a network and building a knowledge base to go into the ecosystem. And I
Mhm.
felt it was a really interesting time, given that venture had historically in the modern era, not played a significant role in space and defense. Historically, in the 50s and 60s, one could argue that Silicon Valley was largely created thanks to the defense ecosystem. But in modern era, the venture had not played in these categories.
Yeah.
And so after we sold the company, I wanted to take my entrepreneurial journey and founder experience and my passion set and the network I'd been developing and
Mhm.
build a venture capital firm focused on that.
Gotcha. And so you sold your company and you were deeply passionate about space and defense. And how did the journey started in terms of building the fund, Space VC? What was it like? I think your first fund was 3 million. It's correct me if I'm wrong. You didn't had a big track record, meaning you didn't invested in many companies, so there was no track record to show. How was it like for you to raise that first fund, 3 million? How were you pitching LPs? What was the response like, and what were the biggest learnings?
You're quite correct, and in fact kind in saying I had a minimal track record. I had no track record on the investing side. When you're an entrepreneur, I didn't grow up from money. I didn't have any money when I was running the company, and so I never made an angel investment before. But obviously, I'd raised 70-80 million dollars in venture, so I was intimately aware of the ecosystem and the process, but from the entrepreneur's lens.
Yeah.
Raising your first fund as someone who doesn't have a track record is a bit like being a first time founder raising your pre-seed or seed round. It's a little bit based on the market and the dynamics. It's based on the clarity of your vision and your thesis. But a lot of it comes down to the founder or the personal bet that you're making. And so for me, raising the 3 million, I started with the clear objective of not wanting to raise the largest fund and really swinging for it, because I felt like I had the self-awareness to understand that from an outside perspective, there were still milestones that I would need to achieve to be able to validate that and build credibility over time. And I was happy to be patient. I just sold the company, so I wasn't rushing into raising the largest fund possible. I was approaching it much more intellectually. I had an intellectual thesis. I had a series of beliefs about why I thought space was an incredible area to invest in, and why adjacent areas to that, namely defense as well, could be really interesting for a venture capital strategy. Again, this is end of 2020, beginning of 2021. So this is
Hmm.
before the Ukraine Russia conflict. This is certainly before some of the other tensions we see.
Yeah.
And so it wasn't quite as clear back then. And so for me, I approached Fund One with a lot of humility. I had, of the $3 million fund, I think we had 30 or 35 LPs. So a lot of small check writers, many
Hmm.
of them from my prior career, in terms of they had made money off the startup and were willing to make a bet on me again.
Yeah.
But a lot of other just great industry folks that I met as I was raising the fund. As you know, when you fundraise, you get a lot of introductions to different
Yeah.
folks in the ecosystem. You expand your network.
Yeah.
And so it took a little bit of time. It took almost a year to raise that fund. I was investing and deploying at the same time, just approaching it with a ton of humility and really focusing on what are kind of the data points and the theses that I want to really try to prove or disprove in this fund,
Yeah.
and then kind of take it from there and think about how it scales.
Got it. And Jonathan, while you were raising Fund One, and it seems like Fund One was, more difficult than Fund Two in terms of raising the fund. Was there any inflection point? Maybe an LP invested, or he or she made intros that kind of changed your trajectory in terms of fundraising, or it went in a very incremental way?
Truthfully, Fund One was much more incremental. There was no, massive inflection point. I'd say in Fund Two, there were different inflection points, but that was based more on the track record.
Yeah.
What I would recommend to first-time managers or solo GPs that are raising their first fund, while it is more difficult, I actually enjoyed the art and the practice of investing and raising capital at the same time, because
Yeah.
you were constantly able to show updates. You were able to show, here are the companies that I'm speaking to, here are the interesting, validation points of the thesis already if you're a sector focused investor,
Hmm.
that we thought coming in and we feel extra strongly about now. Here are parts of the thesis that we've actually evolved quickly to and where we think the opportunity is. And
Yeah.
we also began making investments. And so, within that first year while we were raising, we had made 4 or 5 investments, and several of them ended up raising follow-on rounds. And so, as you know, you're able to show, even if it's very early in their journey, a bit of a track record and thoughtfulness. I also think it can't be understated how important it is to communicate to LPs, perspective and current, what's happening in the portfolio, what are your industry thoughts, what are you seeing on a more macro level. And I think the clarity of that communication and the persistence in which you have with it has led to a lot of great outcomes for me, but I know for other GPs that are raising from LPs for the first time.
Got it. Jonathan, Fund 2 is 20 mil. It's much larger than Fund 1. What has been the portfolio construction for you? Has it evolved from Fund 1 to Fund 2?
The portfolio construction has stayed the same. So for Fund 1, we took the approach that in space and defense, there aren't going to be, maybe as you see in B2B software or fintech or some of these other industries, there aren't going to be 50 winners, quote unquote, in our opinion. We think these industries are going to be very concentrated. They're going to be highly monopolistic on the back end, and that there's an opportunity for 10 to 12 generational companies to be built. That's our personal opinion based on kind of the marketplace and how it evolves. And so because of that, one would argue that as a pre-seed and seed investor, you typically play the numbers game. You're looking to invest in 30, 35, 40 portfolio companies, have a nice even distribution, and your hope is that one or two of those companies, quote unquote, hit. Yeah. For us, we take a much more concentrated and risk-on approach. So we're only investing in 15, maybe 16 companies per fund. The reason is because we want to have as much ownership of those companies that we believe are going to be generational outcomes that drives the fund return even more so. And so for Fund 1, we held a concentrated strategy. It's the same for Fund 2. One dynamic, though, that was a little different is in Fund 1, I intentionally invested in a couple of Series A companies and one growth stage company. That helped accelerate the flywheel for us of working hand in hand with founders at different stages of their journey. So it allowed me as a sector-oriented investor to more quickly build a network. It allowed me to help growth stage companies and early stage companies co-contract together. And it allowed us to build relationships with follow-on capital more quickly than waiting for our early stage portfolio to mature into those various stages. And so it was very intentional in Fund 1 to take a bit of a multi-stage approach, albeit as a very small firm. That was a firm building exercise. In Fund 2, we are specifically pre-seed, which is where the majority of our investments in Fund 1 went. It's where the strategy is really centered on, and it's where the opportunity we see it today.
Got it. And Jonathan, how do you really evaluate startups in space and defense tech? Maybe we can take a couple of your portfolio companies examples.
Broadly speaking, when you're investing at early stage, it's really a founding team and a founder bet, as you know. We're investing at pre-seed. I call it day zero. Oftentimes, these are companies, certainly pre-product, pre-revenue, maybe even pre-incorporation. This is very early in their journey. And so you are working with founders and you're evaluating founders during the idea phase, the idea maze phase, when they have a memo or a rough outline of a presentation and they're raising their first capital. And so for me, I evaluate in three buckets primarily. The first is the founder and the founding team. We're looking with someone with a high motor that has generally, if they're selling into defense or space ecosystems, have had 6 to 12 years of experience. That's been the sweet spot for us. We're very comfortable, and the majority of our founders have been first-time founders and CEOs, but they're not new to the industry, but they're not also overexposed to the bureaucracy and maybe have been run down a little bit and kind of set in their ways in the routine. And so we like someone who's agile, high intellectual curiosity. In space and defense, you find that the mission is very important for a lot of founders. And so a lot of folks in our portfolio are very mission oriented. The second bucket we spend a lot of time thinking about is market. This is maybe more of a debated topic in venture in terms of can you accurately predict and kind of understand the whims of markets. But I think as a sector-focused investor, one of the best things you can have is a prepared mind when you meet an entrepreneur and have a really informed view already of the landscape and the specific sub-markets that they're operating in. It allows us to make decisions more quickly. And so we spend a lot of time, even independent of meeting companies, really thinking about what is the future of technology and the needs of customers in these categories. That way, when we meet a founder, we can accurately judge them on, is the market they're building in large enough today? And if it's not, do we think that that market, adjacent ones, or will grow in the future that enable that type of growth? And then the third one is the product roadmap. I would say the product, but this is pre-product. And so you're evaluating the growth of it. For us, we take a slightly unique view. I'm not looking to invest in early stage companies that have 4 to 5 year R&D cycles and need to raise $100 million to get to an extremely technically impressive,
Yeah.
but potentially risk on MVP. I'm also not looking as much to take a significant amount of what I would call science risk in terms of spinning out technology from a lab where we're still kind of breaking the barriers of science. Some venture firms will, and that's a great fit if you're a founder that fits into those buckets.
Yeah.
For us, our founders have generally taken near-term commercializable technology that they have a clear key insight on based on their prior experience or based on their understanding of the customer pain. And they're able to more quickly and rapidly build, iterate, evolve, and ship product in a way that is quite competitive. And so those are typically the types of companies that we're looking for, even in the hardware or the software world.
Got it. And, the core of the business of venture capital is really the brand, what differentiates you out of all the other funds. Jonathan, for you in your journey, I think in the last 3 or 4 years, how have you thought about, sourcing and then picking and then winning, which is again, it comes down to your brand, all three factors.
It's a great question. I mean, this is where I love being a solo GP because, to be honest, sourcing, picking, winning, and I would argue one of the most important things you can do to help those three aspects is post investment. What do you do in terms of working with your existing portfolio companies? It's like running a startup, albeit it's less around a large internal team. It's more around the dynamics of the network that you manage.
Yeah.
For us, sourcing as an early stage firm, that's where alpha always is, in my opinion. You're always able to potentially meet the next great entrepreneur before someone else if you get conviction more quickly than others in the ecosystem. And so the reality is we are not relying on other VCs for our entrepreneurs that we're meeting, because most of the time we're looking to invest first as a VC firm or very early. And by the time it has reached a tier 1 VC firm, likely they've already raised a pre-seed round or they're looking to raise a round that's larger than the dynamic of what we're looking to raise. So I spend a lot of time with founders before they've started their companies. I spend a lot of time with our portfolio companies who do a great job of pulling in founders. I spend a lot of time with VCs at large who introduce me to EIRs or potential individuals that they think could make a great entrepreneur. Going to your question around brand, one of the benefits of being a sector focused, or even if it's geography or differentiating yourself in a very crowded venture landscape, is that you can be top of mind for folks. And so when we started Space.VC, I was pleasantly surprised by how often someone in my network, oftentimes not in the space or defense ecosystem, but they might be running a venture firm or working at a firm in Boston or San Francisco at a generalist, and a space deal comes across their desk and we're the first firm that they thought of. And because of that, that allowed us very quickly to build relationships and build high quality deal sources. And so I think standing for something is really important. Now, I think what's even more important, to your point around picking and winning, those are two slightly different muscles that have to be built. I think how I think about brand building and how that relates to picking and winning is I just try to be authentically myself. I have a certain set of experiences. I think everyone in venture does. The reality is that no one VC has had every set of experiences or every skill set possible that makes them check all of the boxes for every founder. So as a founder, what I encourage early stage companies to do is think about internally to your team. What are you really good at? What are you exceptional at? And what are you looking to bolster? What weaknesses or gaps do you have in your existing team? And then look to your VC partners beyond just capital and early partnership as helping you fill in those gaps. And so for us, a lot of our founders, the reason they pick Space.VC and me specifically to work with are three very specific reasons. One, they want a former founder who's now a VC, who's been through the journey successfully before and can be a sounding board and a mentor or just a friend as they're going through that journey. Second, they want someone who is very domain focused. Our network, our time, our ideation, every conversation I have is accretive to potentially one of the portfolio companies I have. I don't have to manage HR software and rocket launch and try and think about the networks differently. Everything builds on top of it. And so it can be very helpful to our portfolio companies. Lastly, we are a very go-to-market focused firm, meaning we believe that our founders and founding teams inherently understand better than any venture partner they have what technology needs to be built and how to build it. Of course, we can introduce them to industry experts and engineers that may be able to be accretive to those decisions and conversations. And so we have, from a value add standpoint, focused our time and effort on building up customer networks so we can introduce founders to more customers, capital networks so we can help introduce them to the best partners at the next stage, and government introductions, knowing how important government partnerships are in our ecosystems. And so in terms of winning deals, we articulate that, but most importantly, we refer them to the founders that we've invested in the past. And oftentimes that track record has helped us win competitive deals or helped a founder understand the type of partner we would be for them after we invest.
Yeah, got it. And, talking about being a solo GP, Jonathan, what are the pros and what are the cons that you've experienced so far being a solo GP?
You can move incredibly quickly. Ultimately, it's a very independent, mercenary-oriented role. The buck, quote unquote, stops with you. And so you're able to make independent investment decisions. You're able to move extremely quickly. You own the strategy. The downside is if you're a solo GP, oftentimes one of the benefits of making decisions is being able to debate it or talk it through or have a sounding board or have a diversity of experiences and perspectives. Yeah. And so as a solo GP, one of the things that you would want to aim for is to externally from the fund build in a network of collaborators, whether at other firms or advisors or just folks friendly with the firm that you can have casual conversation with either when you're doing due diligence or when you want to better understand an ecosystem. For me, my thought process is I really like to immerse myself in the business to really think about if I was the founder or CEO of this business, what are all of the concerns and constraints that I would have in helping evaluate it? And I write memos internally. I spend a lot of time reflecting, writing notes, writing memos, not to share with anyone truthfully, but for my own process. So for me, that's how I bolstered it. And then I'm also not afraid to pick up the phone and reach out to someone if I have a couple of questions. I think venture at its best can be very collaborative. And so I have from time to time reached out to industry experts in very specific types of technologies, just as a gut check. Again, not to make the decision, because I think in venture, you need to own your track record. But as a way to get a sounding board or maybe to learn from their experience and something very specific in particular.
Got it. Let's talk about mistakes and learnings, Jonathan. We can start with fundraising from LPs. What were the mistakes or things that you could have done differently and you did differently in the fund two?
So truthfully, I feel like there's always things you can do better. But generally speaking, fund two was a reaction to the reflection of fund one fundraising and how that could have gone better. And so by all accounts and measures, I'm actually very fortunate that fund two fundraising was a massive success for us. We raised the fund in less than 6 months in a very difficult market. Our target was 20. We ended up raising more than that. And it's with great partners, and 97% of the capital is from new LPs, not from existing. And as you know, those are tough dynamics to raise against. The reality, though, is I had learned from fund one, the mistake I made, or maybe the approach that I took, was about convincing LPs of my worldview, as opposed to prioritizing LPs and viewing it more as a matchmaking, where naturally some LPs were going to be more comfortable with hardware investing than others. Some were going to be more comfortable with defense investing than others. And so I viewed this fundraising process more as a founder might view raising from VCs, in the sense of I'm obviously looking for a set amount of capital, but more importantly, I'm looking for a particular set of partners that bring a particular perspective to the world that I hope matches with mine. And so I was a lot more thoughtful, I hope, in the questions I asked, and being okay with me actually passing on LPs that I didn't feel like if I spent 4 or 5 more meetings with them, they may arrive at the conclusion that I was already dealing with at the first meeting, right? A quick no is way better than a long drawn out no. And so I think I did a good job there. The other area that I really thought through, and obviously I couldn't do with Fund 1, we didn't have a track record. So a lot of it was, here are the areas of investment I think could be interesting. Here's market mapping and research. Fund 2 was a lot more tactical. Here are the investments we've made. Here's how they're doing. Here's how they benchmark. And because of that, I really leaned into as much preparation as possible with my data room and my information. And we were lucky to receive a lot of compliments from LPs saying that this is an extremely robust overview and representation of the past 3 years. And I think front loading that work and not waiting for LPs to ask those questions and create material on the fly, I did it
Mhm.
all before we fundraised,
Yeah.
helped to allow those conversations to move more quickly and for new LPs to get comfortable with us as well more quickly. And so there are certainly things that I would adjust as I think about Fund 3 fundraising or a future effort. But
Yeah.
largely speaking, I think Fund 2 was a adjustment and a reaction to how we could optimize and improve it compared to Fund 1.
Got it. Yeah, they say Fund One is about they're betting on you and the story you're telling. Fund Two is about did you execute on that story, and Fund Three is about does that story even make sense?
Yep.
And Jonathan, moving to investing side, uh, is there something that you know now and you wish you knew earlier?
Patience. I think a lot of VCs, whether you're new to a firm or starting a new fund, you want to move quickly. You want
Yeah.
to make investments. You want to have portfolio companies. The reality of making investments and company building is that these take time. And so what I try to balance in my day to day is is a high sense of urgency to speak to as many of the most relevant, interesting entrepreneurs that are fundraising every day and
Hmm.
constantly building our industry domain expertise and network. But in reality, being very patient and clear minded and not being caught by the whims of today of the venture market.
Yeah.
Venture oftentimes is very much a groupthink industry, as you know.
Yeah.
And so, how do you maintain independent thought and patience when it comes to deploying capital? As a concentrated investor, I only get to make 3, 4, maybe 5 bets per year.
Hmm.
And because of that, my whole orientation and structure is around how can I optimize to make the best 3, 4, or 5 decisions and have a really high close rate, obviously, of winning deals that we decide that we want to proceed in investing in. And so I think sometimes young VCs, myself included, when you start investing, you want to move quickly. You drift from your portfolio construction potentially from time to time. And the reality is being much more pragmatic and thoughtful in your approach pays
Hmm.
dividends over time.
Got it. And you're still early in your journey. It's just been 3-4 years, and you're learning, right? As you said, you can always be improving. What are a few things while you've been learning? You've been a student of the venture capital. Uh, what are the biggest myths that you've come across, Jonathan? In the beginning, you thought it makes sense, but they're total bullshit or just doesn't make any sense.
I think I had a very unique perspective on venture, not unique, but specific, I guess, rather, perspective in the sense of as an entrepreneur, you understand the dynamics of venture, but from that side of the table. And having gone back, quote unquote, behind the curtain and understanding a little bit more of how decisions are made,
Hmm.
I think it's really helpful for entrepreneurs to understand the incentives of venture firms, of the partners that they're speaking to, understand how important it is the person, not the firm, that
Yeah.
is going to be on your cap table, that's going to be
Yeah.
leading the deal, and to understand the dynamic in venture today.
Hmm.
Venture has never had, in my opinion, a bigger spread between strategies in terms of multi stage, multi tier firms that have exquisite reputations based on 20, 30, 40 years of
Hmm.
excellence. But
Yeah.
the reality is that the number of investments they're making has swelled. The fund
Hmm.
sizes have significantly swelled. And also at the same time, you have more unique venture firms than ever before, like Space.VC, emerging that are an opportunity, but you also have to evaluate as a founder. And so it's a much more difficult landscape today than it was maybe 10 or 15 years ago. One thing I wish entrepreneurs knew a little bit more about was how their company fits into the fund dynamics and portfolio construction of the firm that they're raising capital from.
Hmm.
And so the myth to be busted here, I suppose, is that every company is equally important. That VC firms will always remain kind of at your side and kind of leaning in. The reality that I've experienced from venture now, we don't do this at our firm because of my founder background and the importance I place on that. But I have been surprised by how quickly firms will lean in and out of investments. How when something appears to be going poorly, sometimes the largest investors aren't the ones that are most actively trying to solve those problems. And so, again, I always advise to entrepreneurs there are exceptional VCs at big firms and at small firms. And what's more important is not the name on press release day or the credibility you think you have in raising from a certain firm. It's
Mhm.
way more about the partnership you have with the individual VC, the
Yeah.
strategy they're employing, and how creative and relevant that is to your company, and
Yeah.
most importantly, do they have the ability to help you raise more capital, or can they directly invest more capital as a
Mhm.
follow-on?
Yeah.
And kind of evaluating all of those things, I think, is really important. I didn't have as deep of an appreciation for it when I was an entrepreneur. I certainly do now, having been on the venture side.
Got it. Yeah. Being on the other side now, you can make sense out of it. Before we move into our final part, Jonathan, since I'm dialing in from India and you have an investment in India, a startup called Pixel, maybe you can talk about how did the investment come about?
Pixel Space was one of those rare instances where we actually reached out to them. I had spent a lot of time in a sector in space called Earth observation, which, as you know, are satellite constellations that have cameras or different sensors that are pointing at Earth that are collecting different data sets, right? And, typically when people think of satellite imagery, they're thinking of this beautiful picture. We call it optical in the industry. But
Hmm.
there was a growing consensus and thought around if you were able to have hyperspectral sensors, which allows you to see hundreds of bands of visible light, it allows you to see the chemical composition of elements from space. If you and I had a hyperspectral sensor on our iPhone, we'd
Yeah.
be able to see the chemical composition of a glass of water, as an
Yeah.
example,
Yeah.
or the tree in front of us. And
Hmm.
so I was really intrigued by the commercial potential and started to spend a lot of time with customers who might consume hyperspectral data. To make a long story short, became very convinced on the opportunity within the sector and began to investigate and explore which companies were being backed in the category.
Hmm.
Ironically, at the time, there were only two companies that really came to our radar beyond the scientific endeavors that space agencies were pursuing. One
Hmm.
was actually a Peter Thiel backed company, and one was Pixel. And the
Hmm.
Peter Thiel backed company had just raised a nice flashy round, was based in the US. And then you had the Pixel team, which was a little bit scrappier and was in Bangalore, India, of all places. And so, we reached out to both, we had conversations, and it very quickly became apparent to us that the Pixel team, we felt, had not only the right mindset and the potential, but also the right product roadmap, and competitive dynamic at play that we felt would help make them long-term winners. We feel very validated in that decision, but all credit goes to Oasis and the Pixel team, as you know.
Hmm.
So Pixel today is a satellite constellation company that collects hyperspectral data, and they're
Hmm.
also building satellite buses for Indian government customers. And so we're really excited about Pixel, and we think they can be the most important space company to emerge from India in the next 5 to 10 years.
Yeah, yeah, no, absolutely. I've been hearing a lot of good things about them. I think recently they closed another round, and and with this, Jonathan, my co-pilot in the back, Alfonso, he wants to get in, and he wants to take over the final part. Final part is more around getting to know you outside of work, and so his first question is, Jonathan, what are you most obsessed about these days outside of work?
I love history. I'm a voracious reader, consumer of podcasts, documentaries. So there's always one of those that's on my docket.
Hmm.
I love interior design. My wife and I spend a lot of time designing our home, or looking at kind of shows or documentaries on new design techniques.
Hmm.
So I'm very, kind of active, thoughtful around that sector. And then obsessive, I think, I live in Austin, Texas, and pickleball is kind of, the go-to sport these days. And so you can also find me on a pickleball court, typically on the weekends.
Man, pickleball is just booming. I had another guest on the podcast this afternoon, and same thing. Guess what? He also loves playing pickleball these days, and I'm yet to play pickleball. We got a court just opened up next to our apartment complex, hoping to make it on the court soon. And Jonathan, what's been making you smile lately?
It's a great question. What's been making me smile recently, to be honest, even if this is cliche, I get so much energy from the entrepreneurs that we talk to. So, within the realm of work, I suppose, it would be, I talk to 8 to 10 entrepreneurs a day. And genuinely, there are some days where I'm sitting at the dining room table after a long day of meetings and just in awe of, obviously, we can't invest or support in the majority of entrepreneurs that we speak to, but just the vision, the audaciousness. I'm just so thankful for the number of people that are willing to take the jump.
Yeah.
Outside of work, I have a friend who got a new puppy who's super cute, and so I've been getting to play with his puppy, and I guess that gives me a smile.
A hack you can't live your life without.
Technology wise, I've been using Superhuman, which is a very specific example, but it is the
Yeah.
only way for me as a solo GP to, uh, it is one of the only ways for me to be as efficient as I can. And
Hmm.
so I've been relying on that. A broader hack than that, don't be afraid to reach out cold to people.
Hmm.
Throughout my entire life, both as a startup founder, now on the venture side, whether it's fundraising, whether it's meeting entrepreneurs, whether it's just wanting to build relationships with interesting folks in industry,
Yeah.
I think sometimes people are too cautious and afraid to reach out cold. But I
Hmm.
also think when you do it, there's a very specific way to do it. Be gracious, be aware of what you're asking for, be very specific with your ask.
Yeah.
Try to make sure it's relevant for them, and then you're not wasting time. Don't
Yeah.
blast out the same message to a bunch of people. And so I've never been afraid to send a cold DM or a message, and that's been pretty accretive in my career so far.
Yeah, yeah, love it. And Jonathan, one last one. We know you, as a tech founder, now as an investor. What do your friends know you for? Who are you outside of work?
I'm very competitive when it comes to anything. So board games, pickleball.
I can
So
sense it.
they'd probably say competitive. I love to travel. My wife and I love to travel, and so
Yeah,
even if it's for short weekend trips, they probably know us as the couple that is spending their time and effort traveling and visiting and exploring new places.
yeah.
We also love cooking, and so our friends know my wife and I as a couple that's not afraid to roll up our sleeves and try out a new recipe
Mhm.
or get in the kitchen and make a mess. And so
Yeah,
those are three areas that our friends know us for.
yeah, yeah. And I'm personally excited for your trip to India, and I think it's going to be the first time in India for you.
Yes, first time in India. Very excited to be there. We've seen a dramatic rise in entrepreneurs starting space and defense oriented companies.
Hmm.
And with our fund too, it does allow us to invest in slightly adjacent industries there too, manufacturing, industrials, some software and AI in those categories. And we see a lot of great founders in India building there too. So excited to meet many of them.
Love it. Jonathan, thank you so much for making the time to come on the pod. Really appreciate you for doing that.
Of course. Thanks for having me.